Good morning, guys. I'm a little late, so I won't go through the full countdown. Nobody cares about this. I mean, the countdown is used to synchronize the streams between my platform and LinkedIn, because LinkedIn I have a delay of 30 seconds, so I have to manage that before I start. But anyway, nobody cares about the tech stuff. Maybe a few do, but that's not the biggest deal. So this week, what will we talk about? So you saw the big picture. The introduction, which is Powell. Here we go again with the transitory narrative about inflation. So we had this from Powell again. So we'll talk a little bit about what he said after deciding not to change, not to either increase or decrease rates this time. We'll talk about geopolitics, obviously a couple of things about Ukraine again and again. And we'll move on to the markets, and the dashboard. Actually, the markets were pretty quiet this week, but there are a couple interesting things to note. So let's start right now where I am. So I need to okay, let's go. So let's go with our friend Powell. Well, not yet. We'll start with geopolitics as usual. So geopolitics, what do we have? We have, a kind of embarrassing situation where there was a routine test for astronauts for the Boeing platform to send astronauts into space. I mean, what was supposed to be a routine exercise became kind of a situation because these guys were stranded for a couple of months up in the air. And what's really embarrassing, in my opinion, is that the NASA was not capable to take them back to Earth, which is insane when you think that they had to ask a private contractor, SpaceX, to save them. If you remember, a couple of months ago, there was already an American astronaut that was stranded in space and in the ISS, and that was rescued by the Russians. I mean, obviously, at the time where Russia is the bad guy, it was not really, convenient to talk about this on the news, but this is exactly what happened. And now, for a second time, you had someone else that had to be the leader to save to save these astronauts. So this just shows how the government in the U.S. has been weakened and kind of collapsing on itself. Because some of the points that we addressed already, such as corruption, waste, all that kind of thing. But anyways, this is a situation. It's not necessary to spend too much time on this. More important are the situation is the situation in Ukraine, where we had this week a call between Trump and Putin, and actually it was kind of a it didn't look too well for Trump, because he failed to secure a truce or even a ceasefire agreement in Ukraine. Why? Because he has no, let's say, leverage for negotiation. The one that has leverage for negotiation is Putin at this time. They have reconquered the Kursk Oblast in North Ukraine, that part of Russia that Ukraine had made an incursion to. You should read about how they did it, by going through a pipeline. It's really a movie stuff. It's interesting. But anyway, so they reconquered that part. There's only very limited land, Russian land, to reconquer at this time in the north of Ukraine. And on the eastern part of Ukraine, the Russian troops are still advancing, and Ukrainian troops are retreating, to the point that again, this is Putin and Russia who have the leverage in the negotiations, so they are not ready to accept a ceasefire for any time, like 30 days. That would give the time to Ukraine to rearm, to reinforce, and to stabilize their positions. If you remember, I've mentioned that a couple of times already, is that the Russians had been deceived a couple of times already with the Minsk I Accords, the Minsk II Accords, and even the discussions, the negotiation that happened in Istanbul right after the start of the war, and these negotiations were torpedoed, like I mentioned a couple of times already, by Boris Johnson, and to continue the war. So this is where we are at this time. Putin has made it clear that he wants Crimea, the current regions occupied by Russia who are Russian speaking. He doesn't made any claim on Odessa at this time. Odessa is important because it would cut the access for Ukraine to the Black Sea. So no sea access for Ukraine anymore. That's what it means. And he said basically that Odessa, he would have no claim on Odessa if a peace agreement would come fast. If not, and if they manage to conquer Odessa, then obviously that would be a very different situation. So this is where we are now. This doesn't really look good for the West and NATO. Again, it's in peace negotiation. It's all about who has the leverage at the time of negotiation. And West and NATO don't have that at this time. So, even the BBC, for instance, agrees that everything is kind of finished at this time, specifically in the Kursk region, like I just mentioned. But the other parts of Ukraine are, suffering some losses, both in terms of troops, obviously, but in terms of ground on the terrain. And you already see some neighbor countries claiming some land from Ukraine. So kind of after the Syrian regime collapsed, and you have some part of Syria occupied by both Israel, Russia, slightly by proxies, Turkey in the north. There's the same kind of situation in Ukraine. Why? Because Ukraine, if you remember, if you don't, in the early 1940s, at the time where Russia had made a peace agreement with Hitler, Germany. Behind this agreement, actually, Stalin reorganized the countries that were, is in his neighborhood. So to build Ukraine, he took land from Poland, from Hungary, and from Romania. And the lady you see here is one of the Romanian politicians who start getting some claims about the land that they lost when Stalin reorganized reorganized the countries there under the USSR umbrella. So that's who Romania starting making some claims, but that's not the only one. Poland has said that this would come into consideration, even Hungary. So if the Ukrainian regime would collapse, that would probably mean further issues down the road. I put a little soldier at the bottom with kind of a gamepad because I wanted to show you how the war is conducted at this time, which is basically with drones. I have video ready, but I won't show it because I don't think it's, at the end of the day, it's appropriate, because you see, this is a video where you see the soldiers using land drones and sky drones, so flying drones, to kill other people, you know. And this is again something that I probably mentioned already, where you have full drone battalions in both armies, in armies on both sides. And by the way, Ukrainians were much better at conducting drones until recently in that war than the Russians. But for the, you know, I've seen a report by a French reporter that spent some time on the Russian side recently, and they said that, you know, these battalions of drone operators are usually very pretty young kids, you know, kind of playing video games, but this is video games where you actually kill people. So I won't show you the video because it can be pretty disturbing for some people. So in this context, you have so the US is moving away from Ukraine, and on the other side, you have European countries such as the UK and France that are committing, let's say, some troops on the ground to help Ukraine. Obviously, again, that would be a direct escalation from the Russian side, because they would consider that it would be an act of war from a NATO member in Ukraine, which means that it would be directly a war between Russia and NATO. And you know, you have the former Russian president Dmitry Medvedev, who said that, you know, before doing something that the Europeans would regret, then they would better consult with the United States before doing this, because, you know, again, it can unleash a chain of events that would be uncontrollable again. You know, anytime we think that we are moving towards peace, some European leaders are trying to get back into war, like I said, very often for domestic. Now you have Europe supposedly committing to help Ukraine, but it's not as simple as that. You know, even so, the Kyiv Post, for instance, Ukrainian newspaper, mentioned that it's too early to agree on EU proposed 40 billion military aid. Italy and Spain say. So there are, you know, dissensions in the European Union about the help to provide to Ukraine. So that's a big issue. So it's, I mean, the help to Ukraine is definitely not guaranteed, and we'll see what happens. So we again have, I'm a little bit concerned, because I am concerned that I may lose the connection and then may lose as well the stream to LinkedIn. So we'll see. I'll check at the end, and otherwise I'll do a video again. So again, so you have Europe trying to bolster its military spending to be able to counter what is supposedly the Russian threat. Again, they have no means to do that. It's a long shot. It will take 10 years, when if the threat is now, it just doesn't make any sense. But I've said that already. So now moving on to Middle East. What happens in the Middle East? Continuation of the mass killings, genocide, how do you say this? Ethnical cleansing or ethnic cleansing, something like this. But there are, you know, very clear reports, so satellite images showing that mass killings and mass grave had happened. It's also reported by humanitarian organizations in Syria. Well, you know what I think about humanitarian organizations, but you know, they were on the side of the current regime. So now going them against the same regime, maybe that is true, and even the Western media is reporting about it. However, the Western government don't say anything about that. They prefer, they have supported the overthrowing Assad, and are still supporting the new regime despite what it's doing at this time. And they even committed a new aid plan, at least Europe, of 2.5 billion, if I remember well, in aid. They have lifted some sanctions. Germany has committed some $380 million as well as a support to the new government. So they prefer keeping a blind eye of what's happening there. So as long as it goes on the side of Western interests, I mean, basically they don't care. So, it's like I say all the time, all the humanitarian stuff, it's just it's just BS for, the narrative for the population to accept what's happening. Maybe one last thing about geopolitics. Xi Jinping and Europe, Xi Jinping has refused an invitation to come to Europe for kind of celebrations for the 50 years of relationships between Europe and China. So that's a really strong, maybe rebuff, you can say that in English. I don't know, maybe a strong, pushback against Europe, showing that, Europe is not considered a key actor, whether it's Russia, obviously, the US, not so much, and now it's validated by China as well. So just again, another way to show that Europe is collapsing in its position in the world, and this is really sad. So maybe now we can move on to economy and maybe check if there are people here. Yes, we have the usual suspects: Attilio, Daniel. There are I see that there are other viewers that don't have mentioned anything yet, but that's fine. So if you have some questions, please let me know, and we'll go from there. So we move on to the economy. I've never been that fast on geopolitics. Isn't that interesting? So economy, we have M2, the monetary velocity that is rising again, like it was rising before. It's a concerning sign, if you ask me, because this is, a trigger generator for inflation, and this is the opposite of what Trump was supposed to do. So, I mean, one of his issues is obviously the strength of the dollar. He has, in terms of economic policy, very often, if you want to fuel your exports, you have an interest to reduce the value of your own currency, some competitive devaluation. So creating dollar it's what is achieved against what Trump would say that he would do, expecting him to control that kind of thing. And no wonder that you have the index of common inflation expectation that is rising at the same time. I believe that $2 trillion supply has increased. The money supply has increased by $2 trillion over the last 2 months, which is the highest since September 2024, when Biden, the former administration, was hoping to kind of give a last boost to be able to win the election. But again, I mean, it's a competitive devaluation which obviously increases the inflation and reduce the purchasing power of regular Americans. So, the money that you get somewhere, you always take it from somewhere else. That was my point. So let's come to the Fed meeting this week and what Powell has announced. Well, he didn't announce anything actually, because the Fed decided to keep the current rates at their current level. The interesting part was that if you look at the dot plot, what is expected, the median rate cut for this year in 2025 is 50 bips. The median rate cut for 2026 is 50 bips again. That's currently their base case. But what was interesting is what he said is in the comments. The Fed said that they have uncertainty. The uncertainty around the economic situation has increased, and the inflation is rising again. So they have cut their GDP growth. They have raised their unemployment expectations. They have raised their PCE inflation expectation forecast. They have raised their core PCE inflation forecast as well. So in short, they are seeing both inflation and weaker economy. And obviously there is a word for that again, which is stagflation. But no worry, guys, because our transitory situation is back. According to J. Powell, this inflation is again transitory, just like last time, right? These guys it's just getting ridiculous. But, as long as we buy in their narratives and that the market seems to be paying attention to what they say, which I understand they have to, because it's not about guessing the real situation. It's very often it's mostly about guessing what the others will think about the situation. So it's a kind of the kabuki, the shadow theater. Like this, everyone pretends and everyone plays the game as they are supposed to. So this is where we are now, into a transitory inflation, but a current stagflation, if you ask me. So in this context, we have the University of Michigan consumer sentiment that is going down again to some of the lows over the last 50 years. So not good. You have the Philly Fed forecast for growth that is down. The manufacturing index that is down as well. Again, other sign of further stagflation happening. Again, not a surprise. And we are already done with economy. I've never been that fast. I'm kind of happy about myself, if you ask me. So let's check. Clifford finally say hello. Hello, Clifford. Okay. So no questions. So we'll move on to the economy. To the market. Sorry, and I will start with this little chart. No, I didn't think about this one, but just this one very rapidly. What is it? This shows that, let me get some information, that not an investment advice. Investments involve a degree of risk, including the risk of loss, and past performance is not a guarantee of future results. It's kind of the regulatory stuff that I have to do. But anyway, you know the drill. So it was kind of an eventful week. The SPY being slightly positive for the week. The big movers for the week were orange juice, but orange juice, if you've seen that collapse the week before, is just recovering this time. Just big volatility. In terms of volatility, the fact that it didn't, the kind of collapse in the market didn't escalate further, helped the VIX being shrunk at this time. So that's why you see a big drop, a drop in the VIX as well. But other than that, there's not much to chew, to be honest, in the market. here what do we have? You have some inflows on for high net worth individuals and retail individuals in the equity space, and you can see that the flows are significantly positive, I would say, both for high net worth individuals and retail, meaning that it's the good old BTFD strategy. Will it work this time? We'll know if the crisis in a couple of months is much bigger than we think it is at this time. Again, we are down. I believe the current drawdown for the S&P is about 7.5%, so not a big deal to be honest. But at the same time, this happened at the time where the Fed, where everyone, at least on the betting platforms like Polymarket, think that QT, the quantitative tightening, will end before May, which means that the Fed may cut rates before May, and the expectations at this time are 100%, which is kind of it doesn't leave much room for discussion. I would say we'll see. So these polling markets, betting markets are very interesting because they are giving much better estimation of what people think. If you look at what happened during the elections, they were mostly good, and it's not surprising because when you do a poll, people don't have incentive to tell you what they actually think. Here, the betting markets, you have people who are putting money on the table based on what they think. So it's probably the main reason why the betting markets are a much better predictor than any poll you can have. What else do we have? And now, so the dashboard for March 22nd, 2025. So let's start. So I will go slightly bigger here. So what do we have? Like I said, very uneventful week on the markets. If you look at the majors representing all asset classes, the moves were not significant, maybe except for gold, which rose again this week. We had a move on oil by plus 2%, but considering that the volatility of oil and the drop that happened the week before, it's not really significant at this time. Like I said, the S&P is only 7.5% away from its all-time high, so it's not really a big deal. Other than that, there's nothing much to say. The volatility ratio is still high, considering the let's say the market action that occurred over the past week. It's not moving much at this time, so the activity is kind of flattening at this time. So what else do we have on equities? Only we kind of have a reversion of what happened over the last week. With the previous week we had US equities down and European equities up. This week we have kind of an inversion of that, mean reversion if you like, with the US equity indices slightly up and European indices down. Specifically here, this is the Euro Stoxx 50. And I think that, I will show you that right after that. In terms of bonds, for once we had bonds going up, which is kind of interesting because we still have some pretty high correlation between the stocks and bonds. We have, again, stocks going slightly up, bonds going slightly up as well, and not protecting when the market, the equity market was going down. So bonds are doing their thing, but you can still see that, the variation on this week, are really not material. So nothing much more to say. And yes, I wanted to show you this. And what is this? This is the long-term bonds versus the S&P. So we are, and basically that's, to me, that's kind of an illustration since 2020 and specifically 2022, because 2020 we had COVID, we had a recovery, and then kind of flat for the rest of 2021, and 2022 is when both S&P and bonds, so equities and bonds, were going down. And when the market recovered, we had this huge gap between bonds and equities that kind of, it looks like a Joe, that is about to, that should be kind of close again, so the reason why I say that, it's just an illustration of the end of the 60-40 portfolio and the risk parity portfolio, because these kind of passive portfolio assume that both asset classes will rise more or less at the same pace and are uncorrelated. However, since 2022, it's not the case anymore. You have the S&P going up, so recovering in 2023, 2024, obviously, and the bonds not recovering at all. And so that totally killed the 60-40 portfolio, or even the risk parity portfolio, because you lose all the main ingredients. First, similar expected performance in the long run, and second, you lose the diversification as well. And so that's really a big deal. So because there's a lot of money managed on these type of strategies. So you see now that TLT is, so the long-term bonds are recovering versus the S&P 500. This is not the first time it happened. If you zoom out and you see that we had periods like the end of 2022. The bonds were recovering slightly against S&P before going back on their downtrend. We'll see if this is the same thing at this time. It doesn't seem to be really only a price action, a price reaction, because what you've seen, for instance, at the end of 2022 was very fast. It more looks like a bounce, a recovery on an extended price action. This one looks a little more smoother, so we'll have to see if it's actually a turnaround about this or not. So again, what I wanted to show you here is basically how nothing happened this week. Again, this is the risk-adjusted momentum for the majors that we have here. So we still have gold on top of the rankings. Not surprising. The volatility is not too high, and the momentum is still there after the collapse in the US dollar. The US dollar stays where it were. Bitcoin again is not moving much recently. Long-term bonds are not moving much either since the beginning of March. It's just volatility around a flat line. They look dead at this time. Oil, the oil momentum, risk-adjusted momentum is still down, and the S&P is still down as well. But the flat line for 1-2 week just shows you that situation seems to have calmed down a little bit. At least it's not escalating further, and we'll see if it's actually a pause or it's the beginning of a turnaround. What is this? Same thing again. Similar idea. When the market was going down, you see that the small caps were crushed. Flight to quality that you can see in the Dow Jones industrial average rising against the S&P. We had the Nasdaq going down against the S&P because we have a beta, so it's increased volatility versus the S&P, so not natural. But if you look at this now over the last 2 weeks, it seems to be quieting down. Nasdaq is similar as the S&P. The small caps are recovering slightly against the S&P, so things seems to be kind of settling at this time. Again, another view of what I said before about European indices versus the S&P. So you see that since the very beginning of the year, first week of the year, European equities were overperforming the S&P strongly. We have a reversion this week that you can see. However, this one, it's only from January 2024, so it's not, it's still pretty short term. So it's always important to actually zoom out. And if you look at this since 2010, you can see that European equity indices have underperformed the S&P quite significantly. So we have some periods where after an extension of this downtrend, you have some reaction on the upside. Again, what's interesting here is that if you look at France, France has made new lows at the end of 2024 before correcting, bouncing back at the beginning of this year with the other indices. One of the interesting things is that Germany and Eurostoxx 50 as a whole actually didn't go as far as this previous bottom in 2022. So can we hope that at least this trend will stabilize? Again, this is a situation that is important to follow, if you ask me. And I will go again about my disclaimer that this is not an investment advice, that all investments involve a degree of risk, including a risk of loss, and past performance is, again, not an indicator of future performance. I'd rather say it multiple times than not enough. So what we see here is what I said slightly earlier, which is, with the equity market bouncing a little, we had the VIX dropping at this time. So again, kind of a little bit of relief in the equity market, but we are still back at the kind of August June 2024 level, almost a year lost in about a month, because it started around 19th of February. We are on the 22nd of February, and this is where we are now. So in 9 months, we lost 9 months of performance with this drop. About that. Activity. You see that the indicators for market activity are still on the rise slightly. This has to be taken with a little grain of salt because, as I mentioned, it's a short-term indicator versus a longer-term indicator, specifically for volume. You see that the volume is increasing at this time. So again, this can come in two cases, either the short-term volume increases or the longer-term volume decreases. It depends on where we are in the in the rolling window of the calculation. But the volume increasing activity is not always a bad sign. Sometimes it means that people that were fleeing the market are coming back in the market strongly. Maybe this has to be correlated with what I mentioned about the market at the beginning, when I said that according to Bank of America, you have high net worth individuals are coming back into the market and have been buying the dip in equities, and retail has been doing the same as well. So this might be the reason why the activity in volume is increasing. So again, it's not only necessarily a bad thing, especially at turning points of the market. You see that this week the volatility activity didn't increase, didn't go back significantly either. But again, another maybe indicators that at least at this time things seems to be kind of settling. What do we have? So theoretical expo, I will pass on this because it didn't move much. As a reminder, this is an indicator of what the risk adjusted risk adjusted strategy would do, because they would go inversely to the risk. And here, if you take volatility as a proxy for the risk, since the volatility didn't move much this week, this just means that the inverse volatility didn't move much either. And so the theoretical exposure for a risk adjusted strategy would not this would not have added extra downside pressure at this time on the equity market. I hope I've made myself clear. And then we have gone around the slides. So let me check if you are here. Yes, everyone's here. I have no questions which is slightly disappointing, to be honest. No big deal. It's Saturday morning. I understand that many of you, just waking up and having, quiet time, maybe watching this and getting updated on what's happening in the world, in the economy, and in the markets. I've managed to make it in less than 45 minutes. I'm pretty happy, hopefully I'll try to do this again as short as this one over the next week. Since I don't have any questions, I will leave you here. Thank you very much for your time. Thank you very much for being here again. And I'm looking forward to next week. In the meantime, I wish you a great weekend and a great week. See you next week. Bye-bye.